Good evening, ladies and gentlemen. Thank you for your attendance on this very important Sunday evening webinar, stock and market forecast. And I will certainly answer, and a large portion of it will be dedicated to Q&A sessions, Q&A question and answers, where I will attempt to answer any question that's asked, and hopefully that's going to help you going forward. Today is Mother's Day. So happy Mother's Day to all moms. And it's May 14, 2017, approximately 9:26 p.m. Eastern Standard Time. Session will be recorded and uploaded to the YouTube channel, Clue to Say the YouTube channel, a bit later tonight. And you will have full access to that for people who missed it or people who want to re-review it going forward. A full disclosure, this is purely for financial education and not for any solicitation or advice. And let us start. So, a couple of broad comments, okay, which are extremely important, and I've always done that. The charts behind you are basically the market, which is the S&P futures trading here, up $1.75, despite the fact that the fat man, the nut, okay, Kim Il-jung, has fired off another missile, except this one veered towards the Russian part of the ocean instead of going towards Japan. Believe me, if it had come close to Japan, futures would be down. So pissing off the Russians is always a good strategy, and he's certainly starting to do that. But he's never going to pick a fight with Russia, I'll tell you that, because Russia supplies a lot of the arms to what he does. Anyway, to say the least, there's a lot of positives this weekend, which I've been monitoring very closely, which I always do. I in fact monitor news in my sleep, and it's good. It doesn't mean we're not going to. It doesn't mean we're not going to incur the atypical volatility that we do every single day, every single week. But the point is that the markets are taking it well, and so far, the short and intermediate term upside on the markets are intact. And those are not simple words that I say. I say that because that is the confirmation and the validation of what I see on the technical charts that I draw, my experience with U.S. financial and global financial markets, and my experience on Wall Street for many, many years. An understanding, a deep understanding of what the political ramifications, both domestic and overseas, are, how they factor into the market, not the black and white headlines that you all read and make some simple assumptions in many cases. Oh, well, that's bad news. It's going to go down. Well, it doesn't work like that in life. We know that very well in our personal lives because we're all family people. Well, I'm sure most of you guys are too, okay? But when it comes to the markets, we tend to be, retail human traders tend to be very juvenile and very amateurish. They tend to forget that they are mature human beings who have been successful in their own businesses, who have raised families, successful kids. But when it comes to trading and markets, they tend to act like, a 5-year-old or a 10-year-old or a 3-year-old throwing tantrums. And you all know that very well. Okay, so the bottom line is, the key point is that we need to use, and you all, I think, need to use more of your life experience, your intellects, your common sense on what you have done so well in your lives, into the same type of behavior when you're trading. And if you can incorporate that, believe me, you will make a heck of a lot more profits, and you will have a lot more kabooms in your portfolio that many of us are enjoying repeatedly for years, if not for months, despite the fact that the market throws us curveballs all the time, and we do tend to take some losses, but those losses are made up in a furious moment within a day, within a couple of days, in some cases within hours. I'm not making up these things. You all see it happen every single day. One of the things that from a behavioral standpoint that is so critical in trading, ladies and gentlemen, is to stay calm. And the only way, and this is just my personal experience, okay? And believe me, my personal experience has rewarded me well, and I thank God for that. But God is not going to give us the wealth and the success that we deserve in this business because we sit on our fat you-know-what and do nothing. He will only help if we move forward in what we do. And this is not a sermon. It's a fact. This is what we teach our children. So why not practice it ourselves? So you got to work hard. You got to be smart. And yes, there will be challenges along the way. But you got to take that fear element or diminish it. You can never take the fear element out of the markets because we're human and there's real money involved. When you see hundreds of dollars, thousands of dollars whipsaw around on a heavy sell move or a large red candle, or if you're short a big fat green candle coming up, yeah, it's not fun. But does that mean that the world's going to end right there? No, it means you need to adapt. You need to be flexible. You need to focus on the stuff that I'm putting across. You need to act on the alerts that I'm putting through because I'm not doing it just as on a whim. I'm a serious guy. There are some people here, in fact, I won't name names, well, one person here who knows me well. We're grateful for every day that God has given us, okay? So try to be a little bit more mature about the way you approach this business. Not a child throwing tantrums and not listening to anything that the parents are trying to say. Now, the only way you can do it, and this is the God honest, simplest answer. The only way you can do it, in my opinion, where you can diminish the element of uncertainty and random emotional fear is to track the technicals. Because technicals and the way I structure my charts, and believe me, I'm no genius, but I am smart when it comes to understanding the markets, and I am smart in adapting to situations developing in front of us, and I'm certainly very smart when it comes to what's the word I'm looking for? Not reacting in a panic situation. Look at Thursday. Market's down 170 points. I'm showing exactly what the markets are going to go. And that's exactly where they went, give or take a few points. And they turned from there. We almost went positive. Show me one other service out there which walked people through that mess on the first part of the morning, which came from nowhere. Many reasons could be given. The fallout of the retail stores because Macy's was collapsing, down 14%. That's a component of the Dow Jones Industrial Average. Or the Apple dividend being paid out. I mean, it's an Apple ex-dividend day or the dividend payout day, I believe. I don't even track it. Okay? Or there could be a myriad of reasons. But the fact is that I guided people through and through, and it was a humongous day, whichever way you slice it or dice it. Despite the fact that there was no way to chart that the previous day that we're going to be down 170 points in the first hour of trading. Welcome to Clueless 8 Trading. This is not a sales pitch. I'm not reading off a script. There's no teleprompter. I'm looking at my screens and I'm looking at the names of some great members who are here on a Sunday evening because they want to improve their lot, at least on this field. All right? So the only way that you can diminish the level of uncertainty, the level of volatility, the level of emotional stupidity, how about that? And we all know what emotional stupidity is. Happens to me too. Not to the level it happens to a lot of you guys. Okay? The only way you can diminish it, stay on the course, adapt, be flexible, take profits at the right time, scale back in, re-enter, long or short, as per what I'm putting across, which is a lot of hard work behind the scenes. I mean a lot of hard work behind the scenes. Don't take my little humor and my jovial nature in the chat room as an indication that you're dealing with a lighthearted, flaky person. I am probably one of the most serious people you'll meet on this side of the business, and probably one of the most knowledgeable ones you'll meet on this side of the business. In many aspects of my life, yeah, I'm an idiot. Don't ask my wife that. Okay? But when this comes to this type of business, I am dead serious. So take it seriously. Sitting there whining and pining and saying, oh, I missed that trade, it's not going to go up. So what? You missed the trade. If the stock is going higher, you can jump back in. I know there's a lot of bad habits that are a baggage of the retail trader. There are tons of them. Could have, should have is one of the best ones. Oh boy, I missed it is the second best one. All complete hogwash, but that's the general thing. Oh boy, every time I buy it goes down. Garbage, as if the market even cares who you are. Unless you are a David Tepper or a Stevie Cohen from Point 72. And by the way, David Tepper bought Snap too. And I mentioned that in the chat room. And I was overjoyed when I read the CNBC thing that he took a small position in Snap. His small position is probably at least $50 million. So my boys Tepper and Steve Cohen both are in Snap. Huge winner on Friday and continuation going forward. Not some random going to the moon garbage that you read around in different forums. But on a technical level, I've showed exactly what the chart might get to, and I think that's where it's going to get to. All you have to do is click on the chart and look at it. Posted it 3 times on Friday. All right. So the key is that from my end to you guys, that one of the key things you'll get out of my service, if you try to, is huge profits, no question about it. Whether it's a double, whether it's a quadruple on a weekly option, you've seen it happen repeatedly. All you had to do was be in the trade, despite the volatility, and not sit around what I call SOA. You all know what that means, sitting on you know what. One of the other things that you can minimize your fear factor and sentiment, aside from being more robotic than emotional, is to lower your position size. Don't always have to go gung-ho on a particular position. I have multiple positions, what I call risk diversification. Yes, my trade size could be bigger. Sometimes they're smaller. But the fact is that if you don't have to lump into one go, you can buy a little bit. Case in, just hypothetically speaking, one contract of something that's $1.50. If you can't afford to do that, then I don't have anything to say. That's like saying you want to drive a car with 50 cents worth of gas in the thing, and you want to drive from New York to Boston. It ain't going to happen. But you can buy little bits of several alerts that's out there, which is not only risk diversification, but it also, on an aggregate basis, pans out to be beautiful profits. It's not that hard to understand. It's the same thing that applies. Now I'm going to stop myself for a minute here. Here's the futures, exactly the way I drew it. I'm going to go back a little bit. And we're heading to that lovely downtrend line. By the time we finish with this session, we're going to be up here. And I've been showing this pattern, inverse head and shoulder, multiple times. Here's your head. Here's your, and this is a multiple complex head and shoulders, not that complex. left shoulders, right shoulders, a dragon bullish pattern, and now the breakout. As you are watching this lovely screen on the Globex futures, on the global markets. And if we get up here in the morning, which is where the completion of this pattern is, actually the full completion of the pattern is around the 2400 level, that's when a lot of the idiots out there, what I call the lemmings and the chasers, and possibly the late sweepers, as they like to call themselves, are going to be buying, and we are gone. Because these are the inflection points that I've constantly kept on showing, and the way I structure my charts, not that hard to understand. Here's an uptrend channel. Here are the different patterns getting in place. Here is a very strong support. And my drawings that my charts that are on the actual Twitter feed takes this chart and then draws more lines with arrows, with my arrows, so to make it life easier for you. Can't get any better than that, guys. Because if you look at my, and if you haven't looked at my chart, there's no reason for you to sit on this session anyway, to be honest with you. I'll be very straightforward. What's the point? Just to listen to my, crackly voice on a Sunday evening? No. Got to look at the charts. Like a new member here, Mike mentioned, like, how do I, on a ACS session this weekend, and he said, how do I print out the charts? Fantastic question. Now, that's dedication, if you ask me. He wants to print out the charts and look at them. Because the more you look at this stuff, it all makes sense. You want to come in, breeze in the morning, not look at the pre-market charts, levels I'm posting. It takes 2 seconds if you really want to make money. It takes 2 seconds to take a pencil and write down the levels I put out. Because 90% of the times, the market's going to trade within those levels. So what's there to freak out? If you know where you're going to fall, you know where you're going to rise, you're going to be fine. If you're walking into a building and you don't know if the floor is going to, and you go up on the 10th floor and you don't know whether if you step on that floor, it's going to break or, and where it's going to fall, whatever. If you don't know your risk parameters, then you're done. I am shocked to know sometimes, and it makes me laugh because you know what, it's, look, I can only help as much as I can, but I'm not your grandma and I'm not your mommy, right? On Mother's Day. How many people don't even bother looking at it when I put out there at 9 in the morning, 8:30 in the morning, or right before the market. Most of the times between 8:30 and 9. And then they come in and then they all act like, oh my God, what's going on? There is no, oh my God, what's going on? It's all structured volatility, ladies and gentlemen. There are random black swan events. That simply means in English, unquantifiable events in the market, like big waterfall declines that start from nowhere on a certain event that might be a domestic political event, economic political event, or things like that. Yes, understood on that part. Can't control those. But if I'm drawing out the things on the volatility structures, at least you know that if it's going to fall from 2390, okay, which is on my charts, this line is drawn, okay, at 2391, that was the previous reversal zone or supply point. That's where the sellers came in, right there. Not that hard to see. So that's going to be resistance here, and that will find some resistance. You can see a little red candle developing right as we speak, right at that level, give or take, right there. No magic. This is a 15-minute chart, so it's a little bit zoomed in more. But there are certain things going on here which are telling me that the market is supported higher in the form of these moving averages, the lines. Look at the curvature of the lines. They're moving higher. This yellow line, which is the trader's friend, known as the 5-day moving average. There are 5 trading days in a week. This is moving higher. So short-term basis, it's moving higher. Now, I want to zoom out more, then that gives us a little bit of a better picture without the noise. Then we start to see what is actually going on. And by the time you wake up tomorrow morning, the markets could be overbought. Most probably will be. And the lemmings and the chasers who chase the market at these potentially hazardous sell points right around these levels are going to get hit. while we're going to go short via puts or the UVXY and make money. Been doing this for a while now and showing this repeatedly, and it's you know, what can I say? So in summary on this part of the thing, the only suggestion I can give you, remember, I don't advise. The only really constructive suggestion I give you, the more you focus on the charts that I put across, the more you do some little background and take some interest in what this is all about, the better off you'll be in managing your profits, jumping into big momentum moves, and making a lot of money. And yes, you will take losses. Trading is about losses. But if you win 7 out of 10 times, you're going to go way ahead. If you think you're going to win on every single trade, you're in la la land. Take a nice trip to Disney and go hang out with Mickey. Your losses have to be 30% versus 70% of the time that you're going to make money. That is winning in a big way. If you're going to hit every single trade that is going to be a winner, that means you got some juice going on that I don't know where it's coming from. It doesn't happen like that. And but some of our winners, quite a few of them, are so big that they minimize the losses that come along, especially on the earnings side. You get one down and you get 2 up a gazillion points. You get 1 flat. I'm talking about earnings, multiple things. And again, when it comes to earnings, very simple suggestion. You don't want to, I hear people say, I don't play earnings, it's too risky. Okay, great, as if trading's not risky. Okay, I mean, just, hey, everyone's to its own. Everyone's got their own style and their risk level, I guess, right? But that's such a insane term. It's too risky to play. It's too much of a gamble. Trading is a gamble. It's a calculated gamble. On the earnings side, yes, it's a little bit more because you are playing overnight on a big win. And we have had a lot. So what's the way to do it? The way I do it is I take some small positions in each of them. And then 2 or 3 of them just go berserk. I sell the loser pretty much right away, but if I see the a reversal happening after hours or the following morning, you will see my alerts on those directly on the Twitter feed. Case in point, C-Trip. Stock was down like $1.48, turned around, now moving higher. HT, never heard of that company before. Some Chinese hotel company. Big win right off earnings. Moving towards 80, took a lot of profits, left a little bit in there. Next day, it's down $2. That's 2 days after earnings, mind you. No big deal. The bulk of the money was taken out. ICIU. First time ever played it. Up a gazillion points. I'm not making this up. You guys know it. Some of you are participating in it. I know that. PEG, a Pegasus system, have traded that in earnings a bunch of times. Up huge. ELF, which is basically the millennial Ulta makeup cosmetics company, played it twice. This time went down a little bit, started turning around, bought it, leaving it as a swing trade. These are $1 options, guys, that are being sold in many cases at $5, $6, $7, $8, $9, $10, $11, $12. You know which one went to $12 from $1.50? MELI, Mercado Libre, the Google of Argentina or Brazil, I forget. South America's Google. And it's still continuing higher. NetTease up 15 right off the bat. Sold. Stock went negative after that. That was Thursday when the market turned. It was like shooting fish in the barrel. Does it happen a lot? It happens a lot. The ones that went down $2, $3, sell right away. 1 in 50 the calls. I always buy a little bit. I don't go crazy, so I'll buy the next week's one, so I have time to scale in if needed. I buy time, and basically just showing you, keeping this open in the background. You can see that what's going on. Futures are up 2 points right now. So what do you call? Lost my chain of thought. Okay, so yeah, the other one, which went berserk, have played it twice. Universal Display, OLED. Options went from $7, and I had very few and some common, to 32. I don't make this up. It's all there. Mercado Libre was the most expensive option. 14. Not 14, 12. 12 bucks. It's like a Priceline type of thing. Went to 45 after earnings. Continued forward to reach 53. So what is this? I'm telling you all this so you guys feel, oh man, I feel really bad. No, I'm just telling you the realities of what goes on. So if you guys all want to sit around spinning your thumb and just saying, oh my God, what's going on? Nothing's going to happen. Nothing is going to change in your life as a trader. Best not to trade. EOG. 40-cent calls. Sold at 3.5 almost. Close to 3. More than 3. Rolled over and bought the 95s. They are moving. The chart is clear as day. Oil, which I'm going to discuss today because it's a very important component of the market. And I've shown that this chart many, many times. Oh no, oil's really slippery. It's going to go down. Great. Do you know what the internal political internals on oil are when it comes to what's going on now? Can anyone tell me what our president, Donald J. Trump, is doing next week? Can somebody tell me what he's doing next week? Step up and tell me, please. And I'm not holding anyone to it, but please tell me. What is he doing next week? Other than, sometimes sending out some stupid some stupid tweets, which doesn't make any sense. He's doing a lot of other great things. So, point is, what is he doing next week? Which relates to oil. Okay, Mike gave one answer. So what is he doing next week? Does anyone know? Somebody just step up and say, no, I don't know, because silence is not, I don't want to waste my time on Sunday evenings with silence. Mike, you already answered. Aside from Mike, does anyone know what he's doing? Can anyone hear?
I don't know.
Okay, so why can't you just say it right away? Why do I have to ask it all the time? No, I'm serious, I mean, you know me, I'm straightforward. Just wake up and say, no, I don't know. So can somebody else tell me I don't know? Okay. Sheila, do you know what he's doing next week?
Not at all.
So why don't you answer me when I asked you about 3 minutes ago?
Sorry.
Don't be sorry, okay? Please. I'm just being straightforward. I'm asking a question. Nobody bothers responding. That, in my opinion, is rude. All right? So like Mike answered, he's going to the Middle East. It's one of the biggest political events that he's doing. And he's a smart cookie. You know why he's a smart cookie? Because he's got guys under him who's smarter than anybody that I know. Good old Tillerson and General Mattis know the Middle East more than anybody in this universe. They have fought wars there. Our boys have died for unnecessary causes out there. They know the political heads. They know who are the good guys. They know who are the bad guys. General Mattis does for sure. Okay? So he's going to the Middle East, to Saudi Arabia, the kingdom of Saudi Arabia, where oil is king. And you think oil is going to crash before he goes there? Oil's going to go exactly where I showed, right off that bottom on that day, which was a Thursday, which was a Friday after the collapse on Thursday night, right there. Okay? And this chart is worth thousands of dollars for traders. Already is for people who are following it. Oil is going to go right here. What's so hard to understand? It's an uptrending channel in a lovely color, dash line. Here's your supports. Here's your dragon bullish breakouts. Here's your sideways consolidation. And imagine this to be a mirror. Okay? So this is the left side of your mirror. This is the right side of your mirror. So and if I show this to a child, they can do this. I said, listen, draw the same pattern on this side of the mirror. So if you draw the same pattern, or the mirror image, as they say, of this side and this side, where does oil land up? There are two levels oil is going to land up over the next couple of weeks and this week. So somebody please step up and tell me. I'm removing this and I'm putting, this is your mirror. I'm sure people have mirrors in their homes, right? So left side of the mirror, right side of the mirror. Mike, thank you for your answer. Very well, well, it's all over the news, so it's not like he had to dig in to get that he's going to the Middle East. Try to be in touch with the news, trust me. Other than all the news stuff that I put in, because I can't put too much news, otherwise I would be like a tabloid, right? But I do put some important stuff out there, but big stuff. Because whatever happens in DC, it's going to affect your pockets. Whatever we do internationally, it's going to affect your pockets. So it's good to turn on the news once in a while. So here's a mirror. Let's go into technicals. There are two levels here that the oil is going to hit over the next 10 to 14 days. I need the answers, please. I'm going to just ask people, because I'm not going to sit around people wasting my time. I don't mean in a bad way, you know. I'm like a good friend who talks straight. Wasting my time with no response. Really, my time is too precious. And I'm doing this for free. So, Brian, please answer.
The first level looks like about 49.20-ish.
Absolutely wrong. Okay, I've already drawn the line, so you don't even have to go that 20-ish style. I've already drawn the line. You just have to look at it. I've already drawn the lines. You just have to look at it and give me the answer.
Yeah, the top level is 50. Yeah, 50-20, 50-10.
Okay, so okay. So let me stop you. So that's the first level, right?
Yep.
And the next one, which completes the pattern, at least on this chart.
Again, about 53.10.
Yeah, 53. Okay.
Yeah.
He's already given the answers, and good old K-Bot, who's one of the smartest cookies I've taught, believe me, and I have to congratulate her. K-Bot 123, one of the best ACS students I've taught. It's my pleasure teaching her, because she picks up things so fast. Not because she's the smartest of all, because she looks with her eyes. Maybe because she has kids, that's why. Right, K-Bot? So, there you go. You got kids, you got to always watch them. So she's always watching that and the charts. So 50 and 53, real simple. Now, I've already drawn the structure, so it makes it easier for people to kind of look at it. So here's your uptrend channel from the bottom, okay, where I identified that oil was going to turn. When every TV that you turned, or you looked at StockTwits or any other forums that you're looking at, they were like, that's it, oil's going to go to 30, whatever. I looked at a bigger term picture. I looked at the hammer reversal, which clearly showed on the daily. If you all remember, it clearly showed on the daily. I even put out and I'll show you next, which I know some of you looked at, which was the follow-through days, which I'm going to cover. Very, very important. The first day of the drop, the first day of the follow-through, and the follow-through has to be confirmed on the fourth day. This is a theory that was created, works extremely well. by William O'Neill, founder, one of the great investors, founder of Investor Business Daily, and you guys can read up on it. I actually put up a tweet there with the link and everything. Follow-through days are very interesting, especially for asset classes like the S&P 500, like oil, like currencies and stuff like that. So looking at that, and thanks, Brian and K-Bot. So bottom line is that you're looking at 1, 2, 3. You have supports here. You see the red lines right there, 45 and change. And you can see that's what the thing bounced off. There's also a minor support here, right there. Now, if you want to look at patterns, this is a large inverse head and shoulder. There's your head. Here's your left shoulder. Bounced off exactly off the right shoulder. And you can see that, I'm sorry, there was the right shoulder, right? Because the head and shoulder looks like this. And then there's your neckline, right? Here's your head. Here's your left shoulder, right shoulder. And that's what's playing out here. That's what's playing out on the S&P 500 multiple times, you know. And then you have the neckline, which is this white line here at 47. And lo and behold, it broke out over the neckline on Wednesday. And I'll show you the daily chart, and you will see that this breakout over the neckline happened on the 4th day. It's like magic. On the 4th day, big, fat, green candle. And EOG went nuts because is very elastic and very correlated with oil in general. Even though many times oil has fallen, and EOG still continues to go higher because they are so great at managing their costs on declining oil prices. One of the finest run American companies out there, Enron Oil and Gas. Okay, not the Enron of the old, but EOG is Enron Oil and Gas. Most people don't realize that. So at this point, the price pattern, there is one other level that I haven't drawn here, which you guys can draw, and it's this right there. Now, how do you identify these levels? And these are things that you guys can see yourself. Anytime, very simple, you see reversals at a certain point from the top or from the bottom, like a bounce, you draw a line on it. That's it. No magic. And you will see that in particular asset classes like oil or the markets or even individual stocks, they'll go exactly there. These are known as supply points because there's supply, i.e. stock to sell. And these are known as demand points, i.e. stocks to buy or yeah, you know, demand to buy. Real simple. It is actually. Now the pattern, the way I've structured it now makes sense to a lot of people, but when people are, watch this, and now we're here kind of moving sideways. So I also showed one of my other charts, if some of you can recall, is it's a large cup. Let me draw this for you guys. You can draw it like a take a thing. You can do this on investing.com, and it's a cup. Everyone have a cup in their house, right? So a cup and handle can be a sideways consolidation, or it can be a consolidation like a flag consolidation where profit takers come in and pull it down a little bit and then breaks out. But one way or the other, if the short at this point, I'm saying short term. I'm not saying oil is going to 53. I said before oil is going to go up here, 49, 50. I'm out of oil and the EOG trade on a short-term basis at around those levels, because at that point, either it's going to spur, just like a pattern, it's going to do this, or it's going to fall to the bottom of the channel. Stocks, many different things do that. Now, if it falls to the bottom of the channel, let's say it's, this is what it's doing right now. Let's say it does this. That's pretty much what it's going to do. And then all of a sudden, it falls $2.50. The so-called emotional media, the so-called, not so-called, the emotional traders and the whole works. Hey, Vic. And Vic just arrived. Star Trader. So what do you have to say? And so-called emotional traders are simply going to be like, oh my God, here we go again. You turn to NBC, those idiots, I shouldn't say idiots. They're a lot of smart people. But anyway, a lot of idiotic statements from smart people too, right? Comments, oh, oil's finished, it's just too much supply, this and that. Not really. From a technical standpoint, I'm going to be watching to see if it holds this channel. If it does, then it's going to do this. Stocks do it. They all do it. Technicals, I would say 90% of the time precede fundamentals. What does it mean in simple English? That how a technical chart is behaving generally precedes type of news or fundamental events that might be coming. Did everyone understand that part?
Yes.
Miss Sheila, did you understand what I just said?
Yes. Yes.
Okay. So a lot of the times, let's put it this way. You know how you put this? Remember, trading is nothing but studying human behavior, except it used to be easier to study human behavior, but humans don't trade the market anymore. It's all these robots, these algorithmic high-frequency trading black boxes, computerized programs run by a bunch of smart Alex, like smarty pants who have no idea about stock markets. Guys who write the programs for black boxes, the algorithms and stuff, they have no idea about stock markets. They'll look at momentum, mathematical indicators, blah, 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 and they're putting in their programs. They know nothing about the market. You ask them to forecast the market, they'll be like, what? There are a bunch of smart guys all across America, all across India, all across, who are the biggest algo programmers? I have a bunch of friends, so I know. They're Russians, they're Indians, they're Americans, homegrown, and they're Chinese. That's it. There's no Tibetans, there are no Dominicans, there are no Mexicans, there are no Canadians. Yeah, some Canadians are very smart too. Okay? There's no Japanese, there's no Taiwanese, and there's certainly nobody from Australia writing algos. They're Indians, there are Chinese, Russians, homegrown Americans, and that's it. And you know what? These programmers know nothing about the stock market. They just follow the movements. All this stuff that I'm explaining, they put it in numbers. It's like my son. He's like a math whiz. Like I failed in calculus almost in college. I'm like, what the hell? But the professor was bad, really bad. I was very good with numbers, so I dropped out of calculus. I managed to get a B or something. And I said, that's it. I'm never going to take calculus. Am I good with numbers? Absolutely. Am I good with advanced math? Absolutely not. My son, on the other hand, is just like, what is this? At 12, he's like taking advanced placement calculus, college level. Some people get it. I don't. The algo guy sitting there in a little room writing the programs, they don't get the market. They get the numbers. So that's why human involvement and emotional involvement in the market has diminished tremendously. So it's very hard for humans to relate. So bottom line is that if the algos are going to move it, they're going to look at this channel, and they're going to say, okay, time to pull back. And if things are if the underlying indicators and stuff are good, they're basically going to move up. Except everything's happening at very fast speed, which is the biggest difficulty in trading. Is if we don't act fast on something, sometimes we are just not getting that entry price we're looking for. But there's nothing we can do about it. I put out a fantastic article on what these high-frequency trading black boxes, these guys do. They put these antennas next to the New York Stock Exchange data centers and stuff. New Jersey has a whole bunch of data centers. Now, if somebody says that's so illegal and unfair that they do that, I hate algos. So you know what my answer is? Life is not fair. Live with it, buddy, like we say in New York. You want fair? Go spend some time with your kids. Even that's not going to be fair. Maybe they'll yell at you. But the point is that there's nothing fair about trading. You have to fight to win. And technicals allow you to do that. So saying all that, this is the max level that I'm looking at. And if this goes from 48 or so, 47.89 right now, and it goes up towards and completes this pattern, that's a lot of money. On GUSH, that's another one that keeps on going higher because that's the 3 times oil ETF, EOG. And I'm kind of specific on the oil things. There's a lot of other great oil names you can trade, but I'm just giving you the basic idea. So yeah, that's it. And then if this happens, that's when Donald, who has a great relationship with the Saudi king. Oh, wow, that's an 8. That's clueless 8. That's great. See, I didn't even realize. I just put it there. 8. Remember, 8 is infinite loop. It's a very lucky number. Okay? Read up on the history of the number 8. That's why the Chinese love the number 8. It's an infinite loop which doesn't end. In other words, you never keep up trying. Whatever comes your way in life, you keep on fighting and you don't quit on whatever you decide not to quit on. That's why it's the infinite loop, okay? So Donald has a great relationship with the Saudi kings. You notice that he says a lot, some crazy stuff sometimes on certain aspects of the Middle East and Muslims and this and that. With the Saudi king, he's the best buddy. And it's good. You don't want to pick fights with the Saudi kings. For what? He's got great business relationships out there. And they love him. Because the Saudi kings are just like Donald. Wealthy, wealthy, wealthy. Except they are really wealthy. They could buy Donald and his 5 generations in one paycheck, all right? So the bottom line is that that's a great thing. And the Saudis are going to be launching their biggest IPO called Saudi Aramco. Read up on it. It's been going on, you know, it's in the works. I think Goldman or somebody is going to be the lead underwriter. Huge fees. They're going to probably make $500 million in fees. It's Arab American company, Aramco, ARAMCO, which was created in the 1930s. So we had an endless supply of oil from the Middle East. They're going to go public. Probably going to be the crappiest IPO if you ask me, but I wouldn't be shorting it. But do you think oil is going to go to $20 before they launch that IPO this year? I don't think so. Oil's going higher for now. Now, if things break down, we need a solid breakdown below 46 in order to create a floor again at 44. End of story. And if it does that, we're going to go short. And so it might seem a lot, 44 to 47, but it does have a big impact on the oil market. So if I look at the daily chart, for example, bear with me 1 second. I'm trying to see the one which I had the whole follow-through days in there. Nope, I guess I didn't have that, but I'll do it right in front. And this is important for all of you to learn because you're after all want to learn something about technical analysis. That's the whole purpose of this thing here. All fun and games. So if you look at the actual chart of oil, okay, and this is interesting. So show you something which is the same type of stuff they talk about in good old on the 50th floor of the Goldman Sachs building. But you're getting it for next to nothing here at Clueless 8 Trading. So watch this. Just be patient and watch. Oh, that's another thing about traders. They're also frigging impatient all the time, and that's part of the reason why they're missing a lot of the trades. Just because a trade is put in place doesn't mean it has to work in the next 5 minutes. I would like to. But just because it's not working on the same day and all the internals and everything are fine, and I'm saying the upside is intact, but just because your P&L is down a little bit that same day and you decide to let it go, which happened to a bunch of people on EOG, you left 300% on the table because you were impatient. You know what I'm saying is the truth. And this happens to a lot. Impatience is the worst trait of a human trader. Try to be a little bit more patient. Try to be a little bit more patient. and you'll see the difference it makes to your portfolio. And that means sticking to some solid swing charts. Look at O'Reilly Auto. Options were bought at 2. It went down to 150, 2.5, 3. They went to almost $9. How long did it take? It took roughly 7 trading days, but it felt like an eternity. If I ask any one of you if they were in ORLY, probably 1 or 2 people will say yes. Am I lying? Were any of you who originally took the O'Reilly trade, ORLY, showed a massive falling wedge and that it's breaking out? It's a slow mover. But it paid 300+% on your money. 300%. I don't care what business you're in. You don't make 300% on your money in 7 days. Unless you're sitting in Atlantic City and some Chinese guy fell asleep at his table and then you won the hand. Aside from that, you're not making 300% anywhere. Now, you don't have to put all your money into one trade, but even bits and pieces pays the bills. Regeneron. Calls went from $4 to 32. I sold a little bit early. Then I got in a little bit. But bulk of my position was sold a little bit early, but way up on that end in the 20s. So my question is, who was in the Regeneron trade? I showed it very clearly. It was very powerful. Don't ask me to show the chart here. Look it up yourself. None of you. Was anyone in the Regeneron trade? Stand up and just say no. Don't do that like waiting around for 5 minutes till I ask it.
I was.
No.
Okay,
No.
at least I heard a couple of yeses. That's great. So the Regeneron trade was a powerful trade. The charts were showing it. The candles weren't breaking. Whenever I posted the chart every 2 days, I was showing it. I didn't keep on pushing it at the higher levels because my first level was reached. I can't remember. Let me see on my other screen. When the stock was at 430. First, I thought it was going to go to 420. Blew past that, went to 430. Pulled back a little bit, and then ended at close to 452. 452. That's the completion of the whole pattern. I put it out there with a big fat green arrow, red arrow saying done. I had a little bit left at that 440, 450 level. But what a trade. Where was the trade alerted? The trade, ladies and gentlemen, I can't drag it from my other screen here, was alerted at at $342. Initially, it was alerted at 325, but I'm not taking that into account because that trade went from 325 on the 4th of November, right before my son's birthday. Okay, I still remember. In 6 days, it went to 452. Please do the math. That's 120 points in 7 trading days. So that was a little bit too much. After that, it was the same old crash and burn, head and shoulders, back and forth, within a very tight range. Then the reversal came at 341. I started alerting around 342 to 345. Stock shot up to 386 within 7 trading days. Now somebody says, man, you're amazing. The next time somebody says I'm amazing, I'm going to basically kick them out of the service. Because I'm the type of guy, I don't need anyone to idolize me. Please. The guys who do that don't last as traders or in my service. All right, I'm just telling you straight out. I'm old enough to say it. Kids idolize idols. Justin Bieber. Well, I ain't Justin Bieber, okay? So stop idolizing me. Idolize your P&L when you do something right. Every guy who said, oh, you're the best, you're the unbelievable, this and that, like going out of the way, not like saying, okay, great stuff, great knowledge and stuff. That's an adult speaking to an adult. Every guy who said, like, you're the most amazing, made a crap load of money in the first 3 days, didn't want to learn anything, and within the first 2 weeks was gone. Not just gone from my service, probably blew up their whole account, and their wife probably made them sleep on the couch forever. Trust me. Or maybe out on the balcony if they have one. All right? So let's get down to reality. Nobody is a genius in this business. Just smarter than others. That's all. All right? Anybody who thinks they're a friggin' genius in this business should seriously not be in my service. So, bottom line is, our good member Golf came in and said, "Hey, take a look at Regeneron again," because it went up to that 380, went to 400. I'm out of it. I'm like, that's it. I mean, that's great. Staying within a channel. I'm going to actually bring in the chart right here to show you all. Bear with me 1 second, please. And it stayed. I have to show the chart because what I'm saying is not going to make any visual sense. So what I am going to do, trying to bring it in. Bear with me 1 second. Oh yeah, what I'm going to do is I'm just going to post it here. Good old technology. Bear with me 1 second. I'm doing that right now. As I'm doing it, let me try to multitask. So it goes to 400. It trades between 360 and 400 on a back and forth pattern, what we call a trading range. So I don't really push the stock at that point. Then Golfy comes in and says, hey, take a look at it. It looks like there's a big bar forming on it. I looked at that. I looked at the reversal hammer. I said, that's it. That, ladies and gentlemen, was at the end of April. And I'm going to stop there while I bring this chart in. And that was it. Put out the calls out there, constantly kept on saying that's a swing trade. What's a swing trade? Patience is needed. Not monkey on a hot tin roof type of behavior, which most retail traders display several times a day. So here's Regeneron. Bear with me 1 second. Okay. Mango. All right. We have it. Houston, we have landed. All right. So here, I'm going to show this to you, and I've showed this chart several times. So this is when Golf comes in and says, you know what? Because Regeneron was acting like within this range and just kind of like sloppy. This is what we call sloppy trading, kind of like slops around. Looks like it wants to go down more. But then this happens. So this is where I alerted again. After alerting here and here. This was like a moonshot. That was too much. I didn't sell here. I was mostly out around these levels. And it kept on shooting higher. So I look at it. I like it. I push out the thing. This is where it was around 4. Okay. And it went to close to, I can't remember exactly off the top of my head, but I think like 60, somewhere around there between 50 and 60. And it went right up here where exactly I'd drawn this line. And I had drawn because this I just snapshotted off my computer. My actual chart has big fat red arrows for people who have who just like to look at arrows. Okay, I had big fat red arrows here, right there. That's exactly where it went. Now, is this not a pattern? When you look back in hindsight, it's one large complex head and shoulders pattern, inverse head and shoulders pattern. Forget this part. That's like a that's what you call going to the moon, like straight shot up. But since then, it created a large inverse head and shoulders with multiple shoulders. But the swing trade, which we bought here, was sold mostly here and here. And this one was the ultimate trade. But these candles kept on telling me there's some big movers coming in. Now, has it stopped going up here? I don't think so. I think they want to take the stock well above 500. Couldn't revisit it again. But this was good enough for that trade, for the pattern completion. So again, why do I highlight that? I highlight that because from a swing standpoint, that needed patience, just like O'Reilly and a bunch of other stocks. Now, some people say, yes, I've had patience, but many times it doesn't work out. I agree. The patience does work out. The volatility is the one that throws us out of our trades. Right, guys? So that's what it does. So I'm going to quickly go over this oil chart again. and then give a couple of words on the market, and then I'll take a bunch of questions. And any questions, feel free to ask me. So this is a weekly chart on oil. And to me, I don't see anything that wrong at all. You got, this is atypical. Again, similar type of Regeneron thing. Let me just refresh your memory. If I put Regeneron right here, okay, and make this smaller. Oh, if I make it smaller, it's not showing me. So let's say, see, let me just actually put it up. Hold on. So take a glimpse of this. Take a good look at this pattern. See that? Inverse head and shoulder, but a complicated one, right? In between channels and all that stuff, but at least you can see the whole pattern completion. Yes? No?
Yep.
Everyone see that?
Yes.
Okay.
Yes.
Okay, good. So now let's get this screen out of here. Move it back into the other screen. And let's take a look to see if this is the same stuff that's going on here. This was oil, ladies and gentlemen. Back at 107. Seems like when the dinosaurs used to roam the earth. Oil at 107. And it was back only 3 years ago. Here, June 2014. Look at the date up here, guys. See that? June 2014. 107. Whoa. I remember filling it like it took me $110 at one point in one of my trucks, you know, gas guzzlers, because we like gasoline-powered trucks, SUVs. We want to drive over 5-inch potholes in expensive Range Rovers because we want to be all warriors. We're such idiots, but that's what we do, right? So the point is, that time had that, and it cost me $110. And like, wow. So there was oil. There is oil now. So let me show you a simple thing here. And this, why is this important? It's important because this will affect all your trades that you're going to do. If oil all of a sudden goes berserk, higher or lower, it's going to affect every single trade you're in. I don't care whether it's a drug stock. I don't care whether you're sitting on Walmart or whether you're sitting on Apple. It's going to fall initially because assets are correlated. And when these ETFs, exchange traded funds, start selling, baskets of things start selling together. All right? They're not as correlated as they used to be, but they are still correlated. It means they're joined. So here's your head. Here's your multiple shoulders. Make this very simple. And here is where oil is going. When is oil going to 60? I don't know. Maybe by the end of the summer. But it's going there. What's the floor on oil? 40. That's your right shoulder. So if somebody asks you about oil and you want to sound like a real smart analyst from Wall Street, you say, well, oil's got a floor at 40 and it's got a strong resistance at around 60. And the person's going to say, hey, you're really smart. You know, can you tell me something about investing? That's exactly what people do. All right, so oil's got a floor at 40, and it's got some nice resistance here around 55. What we looked around on the short-term chart, right? This is nothing but a trading band or a range, and either it's going to break down, which I think is a low probability trade, because the Saudis are not going to let oil break down to 25, and there is no oversupply coming anymore. Even the Iranians, which I posted that news last weekend before oil took off, want oil at 55 because everyone wants their economies to go, to survive. Why would they want oil at 20 and have their economies collapse? Doesn't make sense if they're oil dependent. Oil at 20, the Canadian frigging economy would collapse. And Canadians would be rushing in here. Just kidding. They love their country. It's a beautiful country. My brother-in-law's and half my family is Canadian. Well, not half. My brother-in-law's Canadian. They're very proud people. Great country. Lots of oil. So oil at 20, they'd be bankrupt. Maybe China would buy them. So the bottom line is that This is what's going on the weekly. So oil, if you look at it, is going to go to $65. This is where it's going to find massive resistance. And I drew some simple lines that you all can draw on your own. Now, where do we want oil to be for markets to, to help us with our trades? And this is where we are. What happened here? Oh, we're looking at weekly oil. Sorry, that's why. So I can draw, what you do is you take your price level and you draw and you look for multiple contact points. So multiple contact points would be one here. This is how you draw charts, very simple ones. Right there. So basically 50 to 55. Isn't that what we talked about on the previous chart? Yes?
Yes.
Exactly. Does it match on the weekly chart? Absolutely. That's what's going to happen. The guys who are writing the programs on the oil stuff, the algos, you think they even know where Saudi Arabia is? Yeah, sure they know. But if you ask them to pinpoint it on a map, they probably say, oh, well, it's left of Africa somewhere. Most traders don't even know where half the world is. And then everyone wants to be like a political analyst. You know, I read some of the stuff on stock tweets. I almost fall on the floor. They don't even know where some of these names are. Oh, there was a coup in Cameroon. Okay, where is Cameroon? They're like looking in Australia somewhere. Seriously, as Americans, we are basically very ignorant about the world. That's why we get in trouble, because we're simple. The smartest people who ruled the world forever, the biggest colonists, colonialists, the British, the French, the Italians. Well, the Brits were the best. Were the master of domination, right? Because they knew how to understand cultures. We don't. We just want to embrace everybody, which is good. Different day's topic. That's macroeconomic stuff, all right? So the fact is that this is where it's going. And this is what's going to help the market go higher. Because if oil collapses, let me draw the support levels right here. This is critical support, 39. I don't want to see 39. 42, 42. So 42 is possible. 42, ladies and gentlemen, is possible. And that creates another W type of formation or so. This is critical support, 40. Breaks below 40, we are basically looking not at 25. That's not going to happen, period. It will go to 35. Why do I pick 35? Price level here. That's it. So you have the Goldman Sachs presentation on oil on simple lines. Dead serious. So I monitor it very closely because I'm seeing the correlation with that happening. Now, looking at it quickly on the internal basis, that's also positive. This is known as dynamic momentum index. Simply measures the momentum of a certain asset or stock. I use that on stocks too. It gives you a measure of the energy behind the move. Everyone clear on that? That's why it's called the dynamic momentum index. So it's the energy you feel. Stochastics, slow stochastics, brilliant. Is starting to cross over. Here's your major bottom on slow stochastics. And despite the fact, and this is known as a positive divergence, price was higher, right? But the internals, price was lower slightly by a couple of bucks, but look at the internal stochastics. Were they higher or lower? Were they higher or lower?
Higher.
Were the prices higher or lower from the same dates?
Lower.
I'm sorry, what was that?
Lower.
Lower, right? So when you have, this is known as a positive divergence.